Washington, about that $2,375 extra soon to be in your pocket, never mind. Maybe. The devil is in the details of the Tax Cuts and Jobs Act of 2017, which the House approved today along party lines and is likely to be approved soon by the Senate, may not be as generous as previously billed. Supporters including Ohio Republican U.S. Sen. Rob Portman have been noting an analysis from the Nonpartisan Tax Foundation that found the average Ohio family would see a $2,375 yearly benefit. But the Tax Foundation, which is the most optimistic of the outside groups drilling into the details and economic assumptions of the legislation, has changed that figure. The average Ohio family will see a benefit of $593.84, the organization says in a new analysis it issued Monday. That's accounting for tax savings as well as wage boosts from the bill's economic effects on growth. Whereas national average after-tax incomes were predicted to rise by 4.4% in the earlier analysis, they are now predicted to rise by 1.5%, the Tax Foundation's analyses show. Democrats and other critics were skeptical of the bigger claims from the start. But the change is not due to skepticism. The earlier figures came from economic modeling using the details of the Senate tax plan in November. The new figures are based on the final bill House and Senate negotiators agreed upon, the bill that will be voted on today. That bill has different expiration dates for some tax deductions and credits. Most of the expirations are for individuals, while the corporate cuts will go down from 35% to 21% permanently. The expirations were necessary because of Senate budgeting rules that required holding down the tax package's overall costs, supporters say. But there was additional nuance, John Buell, spokesman for the Tax Foundation, noted. For example, depreciation for the life of a factory building was going to be shorter, 25 years, in the original Senate bill, but instead will remain at 39 years. And the temporary nature of a number of other tax cuts, many for individuals and families, mean they don't generate the economic growth predicted earlier. If all the expirations are wiped out by a future Congress and the tax changes continue beyond 2025, as Republicans say they most likely will be, the economic growth will instead be 4.7% and wages will grow by 3.3%, the Tax Foundation projections say. Rob believes this bill is going to make a big difference for families in Ohio, who will benefit from higher take-home pay, better economic growth, and more job creation, Portman's communications director, Kevin Smith, said. The Nonpartisan Joint Committee on Taxation confirms that every income level gets a tax cut, including middle-class families. We are allowing people to keep more of their paycheck, and spend more their money how they see fit. https://tco/3dqwy9drive8s number tax reform. Any economic model can get people quibbling. While Portman and other supporters say the bill will help the middle class, and while they say even lower-income Americans will benefit from a late change to bolster the child tax credit, critics say the rich still will get the biggest benefit. The Tax Policy Center, a joint project of the Urban Institute and Brookings Institution, says the bill would reduce taxes for all income groups.